is Rory, and I appreciate everybody tuning in. I have a very special guest on the line today. Got Doc from Silver Doctors, the News Doctors, and SD Bullion. How you doing, Doc?
I'm doing well, Rory. It's a pleasure to be with you today.
Well, thank you. I really appreciate you coming on and taking the time to be with me. I really do. I want to just start off with the medallions and these really stunningly beautiful medallions that you are releasing. And if you don't mind, just introduce the audience to them. And I understand that the proofs are going to be accompanied with a certificate. Is that right?
Yeah, exactly. It's the start of a collection. It's called the Heroes SD War Collection. The first coin is called D-Day. We're launching it on June 6th, on the 70th anniversary of the Normandy invasion, really to commemorate that. Both of my grandfathers served in World War II. One in the 29th Infantry Division, was in from D-Day all the way through Germany until the end. He was the lead sniper in the 29th Infantry Division and was one of only, I think, 30 guys in his unit that made it back from the war.
Wow.
And, my other grandfather was in the Pacific Theater as he was a bombardier over in the Pacific Theater in Japan. So that's actually kind of humorously, it's where he met my grandmother. He got injured and she was his nurse. So he,
falling in love with the caregiver.
Right. Yep. But so, anyways, that was kind of we wanted to produce a coin really commemorating and as a tribute to the greatest generation. And then it kind of morphed into the Heroes series with the slogan, "Don't let them die in vain," kind of tying it to today and with everything going on with our government today, that we really have a call as those who would be patriots living today to carry on the legacy that all of our heroes throughout history, beginning with the Revolutionary War times, have fought and died for. So really want to bring that home and tie it together with our current generation. And you're going to see that a lot more with the second coin revolution. But with the first one with D-Day, as you mentioned, with the certificates, we spent about 3 months researching and trying to obtain the information. For those who aren't up to date on their World War II and D-Day history, there was 10,000 Allied casualties on D-Day, and we're producing a strict limit of 10,000 brilliant uncirculated coins, kind of is a tribute to that. But then of the U.S., there's 1,557 missing in action Americans who were lost on D-Day and never found again. They're actually commemorated in the Normandy American Cemetery over in Normandy in the Garden of the Missing. They're commemorated up on the wall. But their names and information and everything, they're not online anywhere, and they're not that information is not accessible to any average American. I'm sure buried in some government archives they have a list somewhere, but even contacting every U.S. government agency, you couldn't get the information. It's amazingly, I didn't think there was anything Google didn't know, but Google doesn't know who they are.
Well, they don't know it because they don't want you to know it.
That could be. But so we actually obtained the information directly from Normandy, from the French who run the American monument over there, and so we were able to obtain all the information for those 1,557 missing in action lost Americans, their full names, their ranks, their units. We obtained their serial numbers. We didn't publish that, but their units, their states, as well as their decorations and honors earned in the war. And so we thought it would be really cool to individually honor each one of those missing in action Americans on the 70th anniversary of D-Day. So for the proof coins, we numbered the proofs to 1,557. Each one is individually numbered, and each one of those proofs is going to, on the certificate of authenticity, individually honors one of those missing in action Americans with all of their info, their names, ranks, their units that they were with, their home states that they were from, and their all their decorations. And so obviously all of them earned Purple Hearts, but quite a few of them have earned quite a few other honors and decorations as well.
That's really cool. I mean, that is, and it's really beautiful, Doc, for you to dug into it that way, to be able to bring that home, to be able to bring them home. And they're gonna be available on June 6th.
The sales will begin June 6th at midnight, 12 a.m. Eastern on Friday, June 6th. The coins should be shipping probably within a week to 10 days after that. We're recording this interview on Thursday the 29th.
Yep.
We're actually getting our sample coins in tomorrow, and once we approve them, they'll be produced the first couple of days of next week, the first week of June. So we expect to have them in about a week or two after June 6th, and by June 6th, the launch will have a hard shipping date confirmed. We hope to actually have them in right around June 6th if everything goes perfect. But
okay. Do you have a price set on them at this point?
The brilliant uncirculated coins are going to be $2.99 over spot.
Okay.
The proof coins currently we're pricing them in a tier discount. I think they start at one is $39 and it goes down to $33 or $34 if you buy 20.
Okay.
And the proofs also come. We had a special commemorative box made, and they'll come obviously in an airtight crystal case for display as well. The certificate.
I mean, it sounds like you've done everything that you can to keep their memory alive and to, like I said, bring them home. So
yeah, we're pretty excited about it.
You should be.
I'm sending my grandfather, who served in the 29th Infantry Division in Germany. He passed several years ago, but all the family members are going to get one in his honor. And the other grandfather just turned 90 this year, and he's still living in Wisconsin, so he'll be getting a few as well.
I'd like to change gears now, if you don't mind, if you're okay with it. Not as happy and as upbeat. Which of the circling black swans do you see doing a 1-point landing first that are out there?
There's so many, like you said. Which one can you pick one out?
Have you got one on your radar?
I mean, I think we'd be remiss to discuss the situation with Russia and China moving away from the dollar as reserve currency. I mean, just last week, Wednesday, their $400 billion 30-year deal with Gazprom, supplying gas to China. And that's a massive, massive deal. It's been over 10 years in the works. Hey, we give them a little incentive and they can get it done in 2 months.
Well, I really think that Obama just made everybody mad when, he started pushing these sanctions. I mean, it started a couple of years ago when they flipped the switch over on the SWIFT system against Iran. That really kind of got under Putin's skin, and that really kind of jump-started everything. And
both of these sanctions the U.S. has shot themselves in the foot with the Iran SWIFT system.
Yep.
Number one, they pulled that out way too soon. If you're going to use really an economic war weapon like what that is, I mean, that's a weapon of war.
Yes.
Totally shutting them out of the SWIFT system. If you're going to use that, you really need to reserve that for a time when it would catch the enemy by surprise. Because in response to pulling that out of their tool chest a little bit early, in my opinion, in using it on Iran, you've seen Russia and China are in the works of developing an alternative payment system to the SWIFT.
Yep.
So if you really wanted to use that as a weapon, if you were smart, you would have waited till the crisis with China or Russia and pulled it out on them. But so the U.S. has definitely shot themselves in the foot with pulling that out on Iran. It's backfired with Iran just saying, okay, we'll move away from the dollar and we'll transact in gold, as well as the East working towards setting up their own payment exchange system. And then, as we've just been discussing, with these latest round of sanctions against Russia, which really have done absolutely nothing to Russia, and our politicians somehow think that there's nothing Russia can do in response to us, when in fact they probably have quite a few more damaging things they can do to us in response to sanctions. And you're seeing that just simply by moving away from using our currency as the reserves. I mean, that's going to do a lot more damage to the U.S. than any sanctions against 10 or 15 Russian bureaucrats going to do against Russia.
Yes. Well, I mean, if there's $400 billion that we know is already, that's gone. That's taken out of the system.
And you've seen Russia unloading their treasury positions really over the last 45 days as well.
Yep.
Expect that to continue.
Yeah, I don't really think that that's gonna change at all. As a matter of fact, I think that it's only going to increase, and I think that China is backdooring them somehow. I mean, as far as those Belgium purchases, I mean, I know that speculation is, or the last I heard, that speculation was that it was the Federal Reserve.
It's pretty clear that it was the Federal Reserve. You're not going to find proof because it's money laundering, and unless you're that's the whole point of running it through Euroclear and through Belgium. But it was the Fed, and the numbers almost exactly line up to the amount of treasuries that Russia was unloading. So unless you want to collapse the treasury market, the Fed had to come up with a buyer for them, and there wasn't any buyers to be found, so they had to launder money through Euroclear and through Belgium and buy them up themselves.
Do you think that maybe the civil war, which is what's going on in Ukraine, in my opinion, do you think that that's going to escalate?
Probably the main thing that is going to continue to escalate and be a very big negative for the U.S. economy and the dollar reserve system.
I'd like to ask you about what's going on with your customers. You have SD Bullion, and what are your customers up to right now? Are they buying? Are they selling? Are they sitting still? Are you seeing any orders of size at all?
Nobody's selling anything. We've got a few inquiries. Nobody's selling anything right now. And you can particularly see that in 90% silver, which, as you know, hasn't been made or produced since 1964. So there's no new supply coming on the market, meaning that it's not being, for example, silver eagles or silver maples. The mines are mining silver. They sell it to the Sunshine Mint. Sunshine Mint mints the blanks. They ship them off to the U.S. Mint, and then they produce fresh new silver. For a 90% silver, those are things that haven't been produced in 40, 50 years, and so the only supply is customers selling their supply back onto the market. And in 90%, the supply is pretty much completely unavailable throughout the wholesale market in the U.S. The wholesalers who have it, premiums have probably risen $1 in the last month, $1 an ounce.
Wow.
So it's on a couple-week delay. I shared a story a week or two ago on our Metals and Markets show that a trader called up one of the wholesale suppliers that we usually purchase 90% from, inquiring about purchasing from, and it was put on hold while they ran some quarters through the machine to see if they could come up with 500 face value, like 357 ounces.
Wow.
And this is one of the largest wholesalers in the U.S. So there's just no supply of 90%, and again, that's just indicative that we don't have any sellers in the market right now.
So just so that I am clear, you said that they put him on hold while they actually counted out to see if they could fill his order.
See if they could come up, to see if they could come up with 2,000 quarters.
That's tight.
That is tight. Now on the new mint products like silver eagles and silver maples, the demand is strong, but currently we don't have a shortage as the mints are being able to keep up with demand currently. Now that could change quickly here with Wednesday and Thursday, silver breaking down below 19. Thursday morning here it traded think as low as about 1877. It's currently back closing in on 19, but just a little bit below it. And gold down close to 1250, and demand has exploded. Large orders, small orders, everything from 1 ounce to thousands of ounces. Buyers are coming out of the woodwork. So supply can become unavailable very quickly in these types of market conditions, particularly if it were to persist through Friday and the weekend and any continued sell-off next week. You'll see premiums start to rise. I mean, right now, Silver Eagle premiums are the lowest we've ever seen them. I think we are offering Silver Eagles as low as $235 over spot. The mint sells to the primary purchasers at $2 per coin over spot. So we've never seen prices like this for Silver Eagles. But the demand continues. It's the dealers continue to sell the coins. The Silver Eagles are still on pace for an all-time sales record here in 2014.
Again.
They're still on pace to eclipse 2013 sales record. The Silver Maples sales are on pace to shatter the Silver Maples record. The demand is there. The demand is as strong as ever on the retail side in the investment silver. You're not seeing the premiums that you did a year or two ago because the mints currently are able to keep up with the demand. And it's been more of a constant, steady demand ever since last April. So it took the mints about 6 to 9 months to ramp up production and meet it, but they've been able to do that here the first half of 2014.
You see that continuing throughout the rest of the year, I would imagine.
Well, depending on silver and gold trades at, like I said, if we see silver visit test 18, and if that bottom from last July were to break, you're going to see shortages instantly. But if 18 holds as the bottom in silver, and my target for the end of 2014, I think we'll retest the $26 level that was the level that was plunged through last April. So if we do see that range of 18 to 24, I think the mints will be able to keep up through the next 6 months anyways, at least until we get well into the next bull cycle here in the secular bull market.
Eric Sprott has said on numerous occasions in the first half of this year that gold is going to $2,400 an ounce. Is the Admiral about to take one on the chin, or how do you see the second half of the year playing out with gold in particular?
Well, I can't ever argue with Eric Sprott. So
right.
I'm not going to sit here and argue with Eric Sprott. He's been right when a lot of people have been wrong. For those who don't remember, he came out in early fall of 2010. Silver was trading at about 17 or 18 bucks an ounce, and he said silver would hit $50 within 6 months. He was ridiculed pretty bad for that trade, or for that call. 6 months later, almost to the day, silver hit, $49.73 at the top, 2011. So he's got a pretty good track record. He's been in the metals since just about the beginning of the bull market. Now, he's made a couple of calls. I think last year he actually he thought gold would reach 2,000 by the end of the year. So nobody's perfect.
Right.
And the one thing that I want to stress to listeners, a lot of those in the precious metals community get really upset at analysts when they make a target or projection and then the metal fails to hit that short-term target. Jim Sinclair comes to mind particularly.
Yes.
That those in the precious metals community almost have a vitriol towards him of anger and aggression that early last year he said that 1,600 would hold as a bottom in gold, and then it obviously did not. I mean, the short-term perspective, any human, unless you have a sports almanac like in Back to the Future, unless you have a metals almanac for the year 2015 and 2014, the short term, you're going to be wrong every once in a while. But the important thing is having a big picture, long-term perspective, fundamental value. I think both Jim Sinclair, Eric Sprott, and I would all, you and yourself, Rory, would agree that gold and silver remain undervalued fundamentally from a long-term perspective. So whether that $2,400 level is hit by December 31st of 2014 or not for a couple of years, in the big picture, those who take a physical position and are able to be right and sit tight while the bull market attempts to buck them off, they'll be good in the end. But in the short term, I mean, that's why it's so hard to endure a bull market, and over half of those who are long in the beginning of the bull market, they're not able to stay long through the end because just the psychology and emotions of a massive secular bull and the pullbacks and corrections. The being right part is easy. It's the sitting tight that's hard.
I welcome these beatdowns because when I got in to gold and silver, I was at about 36 on my first purchase of silver, and I've taken full advantage of what's going on right now to be able to dollar cost average my per ounce cost down, and I welcome it. So because I am in it for the long term. I do believe in sound money. I believe in honest money and not fiat. So every time that I am able to exchange fiat for honest money and get a really great undervalued exchange rate, I'm going to take full advantage of it. And for the listeners out there that are not doing that, I will be more than happy to take whatever you're willing to get rid of, because it's
and particularly this is the time to buy when
exactly.
If you're in a secular bull market, the time to buy really in any asset, in any market, is not chasing the euphoria higher when we saw silver ramp from 30 to 40 to 50. It's hard not to do because your emotions, you feel like, I'm getting left out. I got to buy now. You know the fundamentals. You know it's going higher. But the time to buy is now, and sentiment-wise, everybody's expecting silver to head down to $12, gold to retest 1,000. That's the time to buy. I went pretty much all in on the metals when gold was about 300 and silver was under $5. I backed up the truck again when silver went down towards $9 in 2008, and I am again here right now with silver back under 20. I really believe that $18, $19 silver is just as good a buy today as $8.50 was back in late 2008 or early 2009.
There you go. And sounds like you need a new truck or another truck.
Yeah.
With all the metals manipulation news that's been going, globally, really, for the past couple of weeks, by the bullion banks. I mean, Barclays was fined on May 23rd for price manipulation. Citi, who has been under investigation for several months for Forex manipulation. How do you think that we're going to get to $2,400 gold by year's end? Because I don't really see the Rothschilds just throwing their hands in the air and surrendering. I mean, I don't. But I think that we're going to get there. I really do. I just am curious as to how you see the manipulation impacting what's going on with the pricing mechanisms.
I mean, obviously, if we had an end to the manipulation or default in COMEX or something like that, we'd see gold at 2,400 and beyond overnight, much less at the end of the year. If they're able to continue the status quo as is, the bullion banks throughout the end of the year, I guess to answer your question, how are we going to get to 2,400? I mean, gold really first has a major battle resistance-wise at 1,600, as that was such strong support previously. And barring a COMEX default type market event or China coming out and announcing that they have 35,000 tons of gold reserves or something like that. Barring that, it's going to take gold a while to work its way. I mean, obviously right now it has $300 to move just to work its way back up to 1,600. And once it reaches that level, it's going to take a little while to work through that, what was significant support and will now likely turn into resistance. So barring an unforeseen black swan in the precious metals market, it's going to take gold a little while to work through that 1,600. But once 1,600 is then taken out, the metal will move pretty quickly, I believe, back towards the all-time nominal highs of, I think, 1915, 1920, set right after the U.S. downgrade in, 2011, I believe. And once that's taken out and there's no limit, sure, gold can run very quickly to 2,400. So it's hard to put an exact timeline on it. Yeah. And again, I'm not going to argue with Eric Sprott, but barring a black swan event in the metals, I think it's likely to take longer than 6 months to work through that resistance at 1,600 and move back to a new record high, and really would be almost a double of current prices.
Well, see, I think that the COMEX, its days are numbered. I really do. And when I was speaking with Dave Cransler the other day, he was telling me he was having a conversation with Stephen Lieb, and he was saying that China is actually, it cost China $2,500 an ounce to dig it out of the ground. And you know that as a business person that you're not going to pay double the amount for any product, I don't care what it is, to produce it if you don't see that at some point and fairly soon that you're going to recoup that loss. And I tend to agree with that. And I agree with you and Eric Sprott, obviously. I think that we can make it by the end of this year. I really do. I think that
certainly we can, particularly with the shortage worldwide in physical gold bullion. Really, all the vaults in the West are empty or nearly empty. You're seeing dirty gold turn up at the Swiss refiners, which continue to run it 24/7, 365 days a year, and that's all heading to Shanghai and to China. I mean, certainly you have the potential with the building and impending physical supply shortage, as the bullion banks really don't have much else left to raid. They don't have much less physical gold left to raid anywhere.
Do you think that the East is setting themselves up to become the new pricing mechanism? I mean, as far as, you've got the Shanghai Gold Exchange, you've got Jim Sinclair's, Singapore Metals Exchange, you've got Russia coming in with a physical gold market, you've got Dubai that's a huge gold market, physical once again, and not to forget India.
I mean, the writing's on the wall for anyone who wants to see it, that the Center for Gold is heading east. And even the guys at the CME have finally taken notice. I don't know if you saw the story, Rory, about a week or two ago, that the CME has announced plans that they're going to try to launch a physical gold exchange in either, I think it was Shanghai or Singapore, they're looking at.
Yeah, that's I did see that.
When the CME guys are heading east, you know we're about there.
Well, that's where the gold is.
Right.
You can't have a market if you don't have the product, and there's no product here, so. Nor I contend that the gold and silver fix at this point doesn't play a role at all in setting the price, because you have, round the clock electronic funds or electronic futures contracts for both gold and silver. You've got naked shorting going on, high frequency trading, and basically complete control of the futures market by the bullion banks. And what role, if any, does the gold and silver fix play in the setting of the price for either of the metals? I mean, does it even matter that it's going away in mid-August?
It won't matter as far as the manipulation. I mean, manipulation can continue without it. It does have a role. I mean, if you look back historically, just a price chart of gold and silver at the fix versus the average price traded throughout the rest of the day, and on the Asian market, it's a pretty nice little spike down into the London fix. So it does play a role, but certainly the manipulation does not depend on the fix. It's not the only place that metals are manipulated. I mean, we commonly see massive amounts of contracts dumped on the COMEX open, dumped really on the London market open, and really the shift of pattern there. But it's pretty clear, looking at charts, watching the futures volume, watching the bids flash, that the London fix is not the only time.
Do you think that it going away in August? Do you think does it really mean anything?
I think if anything, as far as the manipulation, probably not. I think if anything, you may see it affect premiums on physical investment silver products slightly, because the fix is used by all of the big players in the physical silver industry to settle trades. Okay. So without that liquidity, and basically having to hedge live on futures contracts versus just use the daily fix, that could affect physical spreads, which then gets passed down to the customer in premiums. So I don't expect it being a lot, but that could be one implication I see of the loss of the fix.
Okay. So like when the mint sells to the primary dealers, They
right.
use
The
the
mint
fix.
sells to the primary dealers, and they sell on the fix.
Okay.
So they don't have to worry about any spreads in hedging in and out. They're going to have to start doing that. That adds cost. That adds cost to the product, which ultimately gets passed down to the consumer.
Right.
Now you have market risk of in and out of making that big purchase.
I want to touch on the miners, if we could. And base metal mining operations capture silver as a byproduct, so their cost per ounce is much different than a primary silver mining operation. A base metal miner can produce as much silver at a profit as they can find. Is this where the current flow of silver, in your opinion, Doc, is this where the current flow of silver is coming from? And if so, is this sustainable much longer? I mean, it is a byproduct.
Yeah, that is where you're talking about the non-primary silver mines. Like you said, it's a byproduct, so it really is more dependent on the overall market situation in general. And if we do see the economy continue to roll over and collapse into the fall here and base metal prices tank, then you'll see production down on silver just as a byproduct on it. Now, on the primary silver mines, they're all in trouble right now with silver under 20. Just last year in 2013, that if you combine the top 12 primary silver miners, they all suffered net income losses, and it was, I think, 1.7 billion if you combine the 12 primary silver miners. So that's with silver at $20 an ounce. So that's not sustainable over the long term. So either they start to draw down production, cut back on costs. Some of them may go off the board. Any of those things decrease the supply from the primary miners.
SRS Rocco had put out that report just a few days ago about the primary silver miners and their cost production, or their cost of production, and it seems like we're set up for a wave of shutdowns. I mean, that just because you can't lose that kind of money, can't lose collectively $1.5 billion in a year. I mean, is it possible for these mining operations to hedge? I mean, they've had to have hedged for the past 2.5 years. I mean, do you think that they're going to be able to continue that for very much longer? I mean, how are they staying afloat at this point, do you think?
Yeah, I mean, each company is a different story, but I mean, you have to reduce costs various different ways, whether it's shutting down different of your mines. Lots of them are laying off workers, and they're using temp workers rather than their traditional employees. It's like the rest of the U.S. economy, that shifting to a temp workforce that you don't have to pay benefits and retirement and a pension and health insurance and all that. You just have a temporary worker who use them for the season and then let them go their way. So you're seeing that really infest the mining sector, as you are throughout the rest of the retail U.S. as well. Obviously going off the board as well. But all those things overall decrease production of the metal,
which is going to impact supply.
Exactly. And decreases supply, and unless it's offset by either recycling, customer sales, or a big ramp in the base metals that produce silver as a byproduct, big takedown from global supply.
I don't see that happening. I see it sliding off the cliff. But that's just what I see. Doc, I certainly appreciate all your time today, and I look forward to speaking with you again soon. Thank you so much.
All right, thanks, Rory. All the best.